Okay, and welcome back, students who are taking financial accounting, and we're working on this series of videos for Chapter 5, the short exercises that were assigned in the digital study guide. And this will be the last video because we only have two exercises left. And, you know, for this series of exercises, it seems like one exercise that was affected another, or maybe I'm just ahead of the curve in the problems. So you may have to go back and rewatch several of the videos, but I pointed that out in the video. So anyway, if you're not getting it, rewatch the videos. Definitely read the textbook, um, especially when it comes to the different concepts that you need to know from a GAAP perspective. Because they are a guide as to what you do in the workplace. You'll come across situations and you'll be wondering what to do, and you'll have to think, well, is this material or isn't it? Am I being consistent here? Can I make a change in methods? Those questions are kind of lean more towards those people who are going to be accountants versus people who are in business management. But it still benefits business managers to understand that when they're looking at, remember, you have to be able to read a financial statement. You might not have to put it together, but you have to be able to read it. And part of that reading, you see a change in method, you need to understand what that change in method is and why it occurred. Okay, right, so 5-14. Haskin Wholesale began the year with the inventory of 51.6 and made purchases of 326,800 during the year. Sales for the year were 505,300, and the gross profit percentage is 38% of sales. Compute Haskin's wholesale estimated cost of ending inventory using the gross profit method. Okay. All right. So let's see here. We're going to start out with beginning inventory. Now, again, this here, realize that when it comes to accounting, a lot of things are word problems. Okay, and I've mentioned this before in other videos. You have information that's directly related to solving the problem. You have information that has nothing to do with solving the problem, and then you have information that has to be, some kind of mathematical calculation has to be performed in order to be able to get useful information. So that's what we're looking at here. I mean, you have direct information here and here and here, but right here you have information that has, you have to do some kind of math in order to get useful information. Right? So we have a beginning inventory of 51.6, and we made purchases of 326,800. So that gives us a cost of goods available for sale of 0.014,687, $378,400 is what's available. Okay. Now, let's see here. We have to estimate our cost of goods sold because this is what's available. Now we have to have we have to take out our cost of goods sold. So let's make that estimation. Right. So it tells us that our revenues were 505,300 and that our gross profit percentage is 38% of the sales. So 505,300 times 38%. Let me pound on the calculator here. 5,300 times 38% ends up being $192,014. And so if I take the, so I take the 505,300 and then I subtract the 192,114, I end up with 682,313 3. End up with 313,286. Okay, and that's a cost of goods sold, so I'm going to subtract that, and that leaves me with my ending inventory estimated. Ending inventory of 65,114 is my estimated ending inventory. Okay, realize that this problem is no different than our other problems. It just we have to that we had studied earlier in the chapter 4, right? I believe it was. So we're starting out with the beginning inventory. We add in our purchases to be able to find out what's available, and then the major difference is we now have to calculate our estimated cost of goods sold. And notice I use the word estimated because we're saying it's at 38%. We don't know that's exact. Okay, that percentage can fluctuate. All right, and that's why I call it my estimated ending inventory, because next period I might end up using 40%. Okay, think about it from a perspective. Let's say you have a restaurant, Red Lobster. The price of lobster doesn't stay consistent throughout the year. Okay, in the off season, the price goes up, right? And I'm just going to pick a number here. Let's say it's $20 a pound for lobster in the off season. But when lobster becomes abundant, the price might only be 15, all right, dollars a pound. And so that's going to change our gross profit percentage, all right, because of the fluctuation in prices, and that's why we call it estimated. Okay, so we have a goods available for sale, and remember we're looking at our books here, and this is an estimated ending inventory. Notice it's also not a physical inventory. Okay, but we estimate that our cost of goods sold is 313,286, so that should give us an estimated ending inventory of 65,114. Now, to take it a step further, if we did a physical inventory and say the physical inventory came in at let's just keep it easy, 62,000, right? Which means we would end up having to make an adjustment for 3,114, right? And that would, we make that adjustment, that's going to affect our cost of goods sold, and that's going to affect our gross profit and, our net income or loss at the end of the accounting period. Okay, so you see how everything just keeps on tying in. One thing ties into the other and ties into the other. And as long as you understand the whole process and the concepts, and you keep that framework in your mind, you're able to just literally plug and play the numbers. But you can't just can't just skim through a textbook and then sit down on a problem and try to stick the numbers in. Okay, it doesn't work that way, because maybe in the textbook they told when working through this, they say, okay, they tell you exactly what your cost of goods sold is. Well, here they're not. They're telling you that you have to make a calculation. So if you're not studying the material and you're not understanding the concept, you're not going to be able to apply it accurately here, because you're not understanding that, oh, I have to do this mathematical calculation and why. Okay, so it may sound like I'm harping, but for those of you who are learning this, this is what it takes. Okay. All right, next problem, and the last one. All right, so inventory turnover. Swanson sales for the year ending March 31st, 2014 were $1,275,000, and cost of goods sold amounted to $728,000. Beginning inventory was 55 and ending inventory was 68. Let's see here. Compute the rate of inventory turnover for the year, round to the nearest tenth. Okay, so inventory turnover. Do we remember what the formula was? All right. Formula was average inventory on the bottom And remember, average inventory means beginning plus ending divided by 2. Okay. And on the top we have our cost of goods sold. So that's our formula, right? Now let me do this here. Right, so what's our cost of goods sold? Right, it said the cost of goods sold amounted to 728,000. So that goes in the numerator. But our average inventory, remember, it's beginning inventory, which in this case here is 55,000, plus ending inventory of 68,000, and that's divided by 2. Dividing by 2 gives us the average of the two. And that is 55 plus 68 divided by 2 gives us an average inventory of 61,500. Okay, so we take 728 divided by 61,500, and the inventory turnover is 11.8 times per year. Okay, right, so that's it for that problem. Easy. This here again, and yeah, plug and play. I mean, you have to know understand the formula. And we covered this in the theory videos. The big part here is, yeah, you might have to calculate your cost of goods sold, and most often you're going to have to figure out what your average inventory if it's not given to you. Okay. In this case here, they gave you the cost of goods sold, but what happens if they had said, if they incorporate in, like information from 5-14 where they told you the sales was 505,300 and was 38% of sales, right? Well, you'd have to go through the math in order to be able to calculate the cost of goods sold. You're looking at this problem, and this is the point I'm trying to make here, is that you have to understand the concepts. The data is going to come at you from all different directions, and if you understand the concepts fully, you'll be able to work within that context, that framework, regardless of how the information came. Here they're telling you that you have 728,000 of cost of goods sold, but what if they, part of this problem was part of 5-14 where they had said 505,300 is your sales, 38% gross profit method, right? And you weren't given this information. How would you determine what your cost of goods sold is? Okay, you see what I'm getting at? If you understand everything about cost of goods sold, you'd be able to take that information and be able to calculate your cost of goods sold. Okay, and that's just one idea. I mean, I could go on about how to get this average inventory depending upon the way the information is given. They don't have to give you beginning and ending inventory. Okay. You might have to back into some of the information. You have to manipulate, change the information in order to get what's useful, right? And I know that I'm going into this long spiel on something that's relatively simple, but I'm choosing this to talk about this at this point in time because it is relatively simple. But realize, this formula is relatively simple, but realize that it all depends upon the information you get, which will make it much more complicated. And you can't just go back into the textbook and look at the example that's in the textbook, right? If you were given this information here and you weren't given this information here and you went back into the textbook and you tried to plug and play numbers because you didn't understand the concept, you would have made your cost of goods sold probably 505.3, and you'd be wrong. You see what the point I'm trying to make? Because you didn't understand this up here, all right, and what it actually takes to make a cost of goods sold. And I know I've gone through this in one of the other videos, and I go on these little rants and raves and whatever have you. But if you're going to want to get this, this is the way you have to be able to think. You have to keep all of the tools, in the back of your head there, okay, and pick and choose what you need when you need it. All right. So I'm finished with the rant, okay, and it's the last video in this here short exercises. Again, if you're not getting the theory, go back over the theory videos, reread the textbook because I don't cover everything in the videos. And if you're still not getting it, feel free to contact an instructor. All right, and we'll pick up in the next series of videos doing the exercises.